Yes, welcome to class again. Tonight we're going to be discussing relevant costing. I I forwarded a video earlier on that we should watch. I don't know if anybody watched, and if you can share your experience in relation to that video on what you understand by relevant costing. Anybody? Anybody willing to share? Nobody watched the video.
I was going through other classes that I missed, so I didn't even know it was a video concerning this class today. I would have checked it, but then I didn't check this relevant costing. No.
All right, no problem then. All right. So relevant costing is an interesting topic. Once you understand the basic concept, the theories behind it, it's not just a topic where you can use your mathematical knowledge and try to unravel the miseries behind it. Is what you have to study to know. You have to study to know what the principles are in relation to relevant costing. So as I've said, it's not something difficult, but you must be very patient to read between the lines to know what a particular question is talking about. Tonight, I trust God to help us. We're going to make it in a very simple way, present the class in a very simple way, so that every one of us will be able to attempt question whenever we see question on relevant costing. So we'll be looking at some examples after explaining what relevant cost is all about, and see how we can become better and move forward and leave these level skills and move to professional level. So relevant costs, as I've said, you can always take down your notes. Sometimes I might not be speaking to my slide as much. Relevant costs. When we talk about relevant costs are future cash flows. They are future cash flows that arise as a direct result or consequence of a decision. Now, you might have an establishment, you've incurred some cost over time. You've incurred cost on building, cost on machineries. Those costs will be termed as past costs, sunk costs. They are costs that are not relevant to future decision-making process. So when you're dealing with relevant costs, what you look out for are costs that are related to the decision you want to take as at that point in time. And these costs, most times, can be in form of variable costs but you should know that variable costs can be in different forms likewise. It can be in form of material, can be in form of labor, it can be in form of variable overhead likewise. So in simple terms, relevant costs are future costs and benefits that will change depending on the decision that is to be taken. So relevant costs exclude sunk costs, and these costs remains, and those costs that remains irrespective of the decision that will be made. And what are those costs that will always remain the same irrespective of the decision? They are fixed costs. So fixed costs are not relevant costs. So based on this slide, I put that decision making involves making a choice between two or more alternatives. The decision will be rational, that is profit maximizing. So all decisions will be made using relevant costs and revenues. So relevant costs are future cash flows arising as a direct consequence of the decision under a consideration. Now, if you want to prepare a meal in your house and you want to cost the materials, you won't start costing the cost of your cylinder, of your gas cylinder. You won't start putting the cost of your cooking utensils, the pots, frying pan, and the rest. No, those are past costs. Now, what will be the relevant cost in that situation when you want to prepare oha soup? The relevant cost will be those ingredients that you buy, because those will form your decision as at that point in time. But you will start thinking of going to buy those those cooking utensils because they're already existing. But the relevant issues at that point is how you will get to the market, how you will get the various ingredients. I don't want to start mentioning them so that, because I'm not used to the ingredients to prepare or soup. I'm not, most times we just eat and we don't care to ask. I know Priest will be able to tell me more about that. Yes, and Chico Dili will also be able to tell me more about the various variables to to prepare that. Yeah, so those ingredients that you need, they are relevant based on your appetite at that point in time. Yes, because they will help you satisfy your appetite, your urge for that particular meal. So those are relevant costs. So there are three elements of relevant costs. We have the cash flows. When we talk about cash flow, it can be the outflow or the inflow. So to evaluate a decision, actual cash flow should be considered. So non-cash items such as depreciation and interdivisional changes should be ignored. So the point is this: relevant cost is used when an organization undertake a one-off project or receive a one-off contract or a special order. So the fact that you are receiving that order, what are the decisions you have to make? What costs will you incur in relation to that? So relevant costs is a concept that is relevant in every organization, either you're in a consultancy firm, either you're in a manufacturing organization, either you are into event planning. This relevant cost is very important. It's even relevant to is a relevant topic to individual, because at every point in time you make decisions, and your certain decisions will result into cash flows. So we have futures of relevant costs. Relevant costs, they are future costs. They are future costs. That is, they are not costs already incurred. It means in relevant costs, you don't look at past costs, you don't look at sunk costs. And also, another feature of relevant costs is that they are cash flows. They are cash flows. Yes, I'm just trying to corroborate this point, cash flows. They are cash flows. It means when you see things like depreciation, amortization, depletion, they don't form part of your relevant cost because they don't involve actual movement of cash. They don't involve actual movement of cash. So when we talk about depreciation, is how you evaluate tangible assets. Amortization is how you evaluate the reduction in the value of intangible assets. And also another feature of relevant cost is that there can be incremental cost. Now, we said fixed costs are not relevant, but when you are to incur a fixed cost based on the decision you have to take at a particular point in time, it means that that incremental cost, that addition to fixed cost, will be a relevant cost at that point in time. So you must learn to read. For example, you have an occasion, but you already have some existing assets. But due to the fact that you want to, let's say you're in an entertainment industry, you 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 give out sound equipment, but because you have been invited to organize a big show, and you discover that your hoovers, your speakers will not be sufficient to give out the appropriate sound expected. Based on that particular program, you now make a decision. Let me get other gadgets, better mixers, better slaves, and the rest of it to boost my sounds. So the incremental cost as at that point in time, those fixed costs we will incur as at that point in time, They are relevant costs. They are relevant costs. But those fixed costs that have been existing over time, they are not relevant to the decision you you are taking at that point in time. But the additional cost, the incremental cost you will incur in relation to fixed costs are relevant costs. Are relevant costs. Sorry, I want to set up a class for someone in Apex. All right. So, having talked about cash flow as one of the elements, we have future costs and revenues. That is, this means that past costs and revenues are only useful insofar as they provide a guide to the future. Costs already spent is known as sunk costs and are irrelevant for decision making. Talked about that. And also we have differential costs and revenues. Only those costs and revenues that alter as a result of a decision being relevant. Yes, just as what I've just mentioned in terms of fixed costs. So where factors are common to all, that is where the fixed cost, there is a cost that is common to all, such as fixed cost. Such costs will be ignored because they are not relevant. It's only the difference based on the decision you want to take at that point in time that will be recognized as relevant cost. So in many short-term situations, the fixed cost remains constant for each of the alternatives being considered. And thus, the marginal costing approach showing sales, marginal cost, and contribution is particularly appropriate. So in the long run, fixed costs do change, and accordingly, the differential cost must include any changes in the amount of fixed cost. So the incremental cost in fixed cost is a relevant cost whenever we are solving a question. Whenever we are solving a question. So when we talk about relevant costs, questions on relevant costs can come in different ways. You will be tested on the concept of material costs. You'll be tested on the concept of labor cost. You'll be tested on the concept of what? Of fixed overhead. Fixed overhead. This is not clear anyway. But when we talk about opportunity cost is an important concept for decision-making purpose. Yes, when talking about relevant cost, yesterday I said opportunity cost is a concept that usually gets students confused, but we won't allow you to get us confused. Yes, we try and walk over it. It is the value of the best alternative that is forgone when a particular course of action is undertaken. For example, you have two options. You have material A. You can either use material A for a production in your organization, or you decide to sell material A. So instead of using material A in your organization and you decide to sell it, the opportunity cost would be the relevant cost in that situation will be the value you sold that particular material. Yeah, so it emphasizes that decisions are concerned with choices and that by choosing one plan, there may be there may well be sacrifices elsewhere in the business. We're going to see this in a better way when we start talking about material costs, labor costs, and the rest of it. So in talking about relevant cost of material, please, you have to follow this very well. You have to follow this very well. Material. When we're looking at material costs, you must always learn to ask yourself questions. We must learn to ask ourselves questions when we are faced with questions on material costs. Number one is that you must ask yourself, is the material in stock? Is the material in stock? This is a question you ask yourself. Sometimes the question will tell you that you have also quantity of material in stock. Once you establish that the material is in stock, once you establish that the material is in stock, sorry, I just want to create a link and forward to someone. I think taxation is coming up by 7. Let me forward the link. Transaction. So when you are faced with a question on material, you have to ask yourself, is the material in stock? If yes, you ask yourself another question. Is the material in constant use? If yes, if the material in stock, you ask yourself another question. Is the material in constant use? That is another question we must ask ourselves. Is a question we must ask ourselves. Is the material in constant use? If yes, what will now be the relevant cost? If yes, what will be the relevant cost? If yes, the relevant cost will be the replacement cost. If yes, sorry, I'll still show the slide. Let me forward this. Yes. So based on this slide, I said we're talking about relevant cost of materials. You ask yourself, is the material in stock? If the material is in stock, you ask yourself, is the material in regular use? If yes, if the material is in regular use, the relevant cost will be the replacement cost or the current purchase price or the buy-in price. Please take notes of that, please. Take note of that. If the material is in regular use, it means as you use it, you keep replacing, you keep replacing. So the replacement cost will be the market value prevailing as at that point in time. Yes, will be the market value prevailing as at that point in time. So if the material is not in constant use, if the material is not in constant use, you can ask yourself another question. Is there an alternative use for that material? If the material is not in constant use, is there alternative use for the material? If yes, there is an alternative use for the material. If your answer is yes, the relevant cost will be the opportunity cost. The opportunity cost. It means the opportunity cost is the sacrifice you will make for not using the material in your organization, either for selling it. In selling it, it means it has a scrap value. Yes. So the scrap value will be the opportunity cost, where it have alternative use. So where the material is in constant use and there is an alternative use, if there is no alternative use, the relevant cost will be what? 0. If there is no any way you can use that material again, the relevant cost will be 0. So speaking to this slide now, that in stock, we've talked about that in regular use and will be replaced, the relevant cost will be the current purchase price, will not be replaced in stock, but will not be replaced. The relevant cost will be what? The opportunity cost. That is the lost scrap value or lost contribution if use material here instead of elsewhere. So if you decide to use the material within the organization, what is the contribution you are losing? That contribution, that opportunity cost you forgone is the relevant cost. Please take note of that. It means if you have an option to use a material within your organization and you have an option to give it out, the opportunity cost, the relevant cost of that material is the opportunity cost. That is the value you will get when you give it out. That is the opportunity cost, and that will be the relevant cost in that case. So also under material, when the material is out of stock, when the material is out of stock, the relevant cost will be what? The current purchase price. Likewise, when you don't have the material in stock and there's need for replacement, the relevant cost will be the prevailing market price at that point in time. So please take note of these things as it relates to material. Take note of these things as it relates to material. I will present a question. Okay, let me just show a question. Let me come up with a question regarding this. Let's come up with a question, a simple question now, before we now present a more simpler one. You know, every question is simple. So please, in relation to material cost, take note of this in case you are writing. In case you are writing, let me summarize all what I've said. Material cost. What are the relevant costs? If the material must be purchased specifically for the project, the cost is relevant. If the material will be purchased specifically for the project, the cost is relevant. The cost of purchasing that material is relevant. If the material is already in inventory, but could be sold elsewhere, take note, but could be sold elsewhere. You have it in your inventory, but could be sold elsewhere. Then the opportunity cost is the relevant cost. See that English? The opportunity cost is the relevant cost. If you already have the material in your inventory, but there is a need for it elsewhere, what will be the relevant cost? The relevant cost will be the opportunity cost. The relevant cost will be the opportunity cost. What is the opportunity cost? The alternative use value or the resale value. Take note of that. Now, in terms of material cost, what are those things that are not relevant? If the material is in stock with no other use, no resale value, it is sunk and it will not be a relevant cost. That is why I said earlier that if the material has an alternative use, if the material does not have an alternative use, it means the relevant cost is what? Is zero. If it does not have an alternative use, the relevant cost is zero. But if it has an alternative use, the relevant cost is what? The opportunity cost. The relevant cost is the opportunity cost. Let's come up with an example in relation to this. Let's see a simple example now in relation to this. Let's say a project. A project requires 500 kg of material X. Current stock. The current stock is 500 kg already in stock. Already in stock. The original, let me say, originally, let's put it that way. Originally purchased at, let's say, 10 naira per kg. Now, material X is regularly used in other projects. Material X is regularly used in other projects and would need to be replaced and will need to be replaced at the current we need to be replaced at the current price of 12 naira per kg. The current price of 12 kg. Let me accept the tax person. Yes, the the material X is regularly used in other projects. Regularly used in other projects. All right, sorry about that. I just have to tend to that tutor. So material X is regularly used in other projects and will need to be replaced at the current price of 12 naira per kg. The scrap value, if not used, will be 4 naira per kg per kg. 4 naira per kg. What will be the relevant cost? This is a very simple one now.
12 naira.
The relevant cost will be what?
12 naira, the current purchase price.
12 naira. So 12 naira in relation to the stock, to the current stock,
Is in stock and is constantly in use.
Yes, so the relevant um, price or relevant cost is 12 naira. It's 12 naira. That is the relevant cost. That is the relevant cost. That is the relevant cost. So we'll see better question in relation to this. Now, talking about labor. Talking about labor.
Don't want to see you. I don't want to.
So talking about labor is also a point we have to look at very well likewise. When we talk about labor in relation to relevant costing, labor, the relevant cost in terms of labor, there are costs of extra hires. When you have people working in your organization permanently and you are paying them, the cost regarding those permanent workers is not relevant. The cost is not relevant because it's a fixed cost. Either they work or they don't work. You have to pay them. So the cost in relation to their service is not a relevant cost because they are permanent staffs. But the relevant cost in terms of labor is when you have an emergency and you need more hands. The cost of getting those extra hands is a relevant cost. Is a relevant cost. So if you look at this diagram, that the relevant cost of labor, where you have spare capacity, where you have excess workers, people lying idle without doing anything, the relevant cost at that point will be what? Will be zero, nil, because they are not working to full utilization, to the full capacity as expected. So where you have full capacity and you need extra hands, for example, you can see you have full capacity and can hire more labor, that is take on extra staff and pay overtime. The relevant cost will be what? The extra cost of labor. The relevant cost will be the extra cost of labor. You have 10,000 workers and you need extra 2,000 workers to meet up with a particular demand. The labor cost on those 2,000 workers will be the relevant cost because the cost related to the 10,000 workers is a past cost. You've already agreed on a term over time. But based on a current decision, on a current market opportunity, you need more hands to help meet up with the demand. So the extra cost of hiring more staff is a relevant cost. Is a relevant cost. Now let's take note of this. Where you have full capacity, but you don't have the means to hire extra workers, you don't have the means to get more workers, what will happen? The relevant cost will be what? Will be opportunity cost of diverting your existing workers to perform another task. Because as you are diverting them to perform another task, what is the contribution you are expected to make on that other task that you are losing? The contribution that you are expected to make on that other tax, but you are losing, will be an opportunity cost plus the cost, the actual cost of their labor. Let me come back again. Where you have full capacity and maybe due to resources, you don't have the capacity to engage extra hands, what will be the relevant cost? But there's an opportunity for you to meet up with demand, but just due to some factors, you cannot get extra hands. Maybe there is no expertise in that particular line, shortage of skilled labor in that particular activity you need workers for. What will happen? You need to ensure that your existing workers, you divert them to help produce in the other sector. So when you have that case, the relevant cost will be what? Opportunity cost of diverting labor. And what is that opportunity cost? That is the lost contribution of you moving them from the other department to another department, and the extra labor cost. And the extra labor cost, that is the existing costs you are to incur on them, or the extra overtime cost you will pay for diverting them for inconvenience. These costs, in addition to the lost contribution in the other department, will give you the relevant cost, will give us the relevant cost, will give the relevant cost. So in terms of labor cost, relevant cost is if new workers must be hired, if new workers must be hired and paid wages for a project, that wages, the cost is a relevant cost. Since new workers are being hired, the cost is a relevant cost. If labor is already employed but idle, if labor is already employed but idle, you have workers, they are just there, the relevant cost is what? Is zero, unless overtime or extra cost is needed. Take note of that, please. So if workers are diverted from other work, the relevant cost is the opportunity cost of lost contribution. The opportunity cost of lost contribution. What is your question, ma?
Sir, if for instance now we need more laborers and we pick from the ones that are less active, what will now be the opportunity cost?
If
I
we
don't know
need more,
if we need more hands, that is, we need more labor, and we pick idle staff.
yes, it means the idle staff, they are not contributing anything to the department they are. It means there is no benefit. They are not giving out anything. There is no, how will I put it now? There is no any contribution to their existing department. If there is no existing contribution, no any contribution, the cost will be zero. So when you pick idle workers, the relevant cost will be zero because there is no contribution to be lost in the other departments because they are already idle. So bringing them into a new role or to aid in the performance of the function will not, the organization will not incur any extra cost. So there will be zero relevant cost in relation to those idle workers. So the idle workers, idle staffs, there is no relevant cost associated with them. So the relevant cost of moving them to another department is zero because you still pay them their existing salary without any extra compensation for moving them. Linda, me.
Hello, sir. Good evening.
Good evening, ma.
Well done, sir. Please, can we say that the opportunity cost is as the same thing as the cost of overtime? Like when you're paying for overtime for a particular job, can we now tag it as the opportunity cost?
No, no. The opportunity cost is this. You are supposed to work in department A. And when you work in department A, your effort will result into a contribution or a profit of 20 naira. But we are now moving you, we are planning to move you from department A to department B. If we should move you from department A to department B, we'll lose a contribution in department A to the tune of 20 naira. So the opportunity cost of moving you or in planning to moving you, the opportunity cost of that decision or the relevant cost of that decision is the 20 naira we'll lose by moving you from department A to B. So the extra cost of labor that you're talking about the extra cost of labor. When we hire additional staff and we pay them, or you do overtime and we pay you extra, that is not an opportunity cost, but is a relevant cost as a result of the fact that we need more time, we need more hour to meet up with the production. That is on its own. So in relation to that, the opportunity cost of getting more staff will be the extra cost, that extra time that you need, the cost of we paying you extra time, and the actual cost you are expected to get, the lost contribution you're expected to give in the other department will be the relevant cost. So the concept of opportunity cost is different from the extra labor cost. So yes, you still want to ask further?
Okay, thank you, sir.
Okay, I can see your hand is still up. That is why. Let me bring it down. All right. So let's look at an example to buttress all these stories. Let's see. Let me see. Let's look at an example, an examination scenario to see. Yes, can somebody read this? Let's see what is expected of us. Yes, can we read? Somebody should read out.
A company is considering whether to agree to do a job for a customer. It has sufficient spare capacity to take on this job. To do the job, 3 different material will be required: material X, Y, and Z. Data relating to these 3 material is as follow: quantity needed for the job, quantity currently held as inventory unit, original cost of unit currently held as inventory, current purchase price, current disposal value. Material X 800, materials Y 600, material Z 500, 200, 400, 300, 20, 15, 30. Then we have 23, 19, 40, 22, 12, 20. Material X is in regular use by the company for other works. Material Y is no longer used. It's no longer in regular use. And the units currently held as inventory have no alternative use. Use for this job. They can be used as a substitute material on a different job, where the contribution could be 25 naira per unit of material Z used. Calculate the total relevant cost of the material for this job for the customer.
All right, thank you very much. Looking at this question, you have to make a decision. You have 3 materials required for a job. Now, for each of the material, you have quantity needed for the job. This is it. You need 800 units of material X. You need 600 units of material Y. You need 500 units of material Z. Now, in relation to the quantity you have in stock currently, quantity currently held as inventory in units. Currently, you have 200 units, you have 400 units, you have 300 units. The original cost of units currently held as inventory, the original cost per unit. You have 20 naira for X, 15 naira for Y, and 30 for Z. The current purchase price, it means if you want to get it in the market now, is what? 23 for X, 19 for Y, and 40 for Z. If you want to dispose them as scrap value, current disposal value 22 for X, 12 for Y, and 20 for Z. The point now is material X is regularly used by the company for other work. Material X is regularly used by the company for other work. So if material X is regularly used by the company for other work, what will happen in this instance? What will happen?
I think the relevant costing will be the replacement cost.
The replacement cost. The replacement cost. In relation to how many units?
600 units.
In relation to
600
six.
units.
So if you now finish exhaust what you have in the store, what will now happen?
You buy from the market.
Okay. Yes, buy from the market.
But you
So the
still
rest,
have to get the 800 units again, so that you take 600 out of it to complete the present order. Then you still leave 200, so that you won't be out of stock in case of any other demand.
very good.
Come again, please.
So the point is, since material X is regularly used, the quantity in stock, the quantity in stock is not relevant to you because you always need it. You always need it. So what quantity do you need for this job? Is 800. So the relevant costs in relation to this, because it's currently always required, we'll get it at the current price. And what quantity are we getting at the current price? It will be 800 units. 800 units. Because even before we plan using going to the market, the existing 200 units in the store might have been requested by the manufacturing or the production department. So our decision should be based on what? On 800. And we need to buy what we have to meet up with this job. And the quantity required is 800 units. So 800 units, when you go to the market, because it is always in regular need, at what price will you buy? At the current purchase price, which is what? Which is 23 naira per unit. So the relevant cost in relation to that is what will be 18,400. 18,400. That is 23 multiplied by 800. 18,400. Why have we treated it this way? Because of the word regularly used by the company. Regularly used. Regularly used. Now, let's now look at material Y. We'll show the workings, but let's just look at it in this order first. Material Y is no longer in regular use. Material Y is no longer in regular use. And the unit currently held as inventory have no alternative use. Have no alternative use. What will happen here?
If there's no alternative use,
It will be disposed.
transport will be zero.
The replacement cost
Since
is 0, but the quantity to be used is still the 400 available. We'll just make use of what we have in stock.
Okay.
the
Relevant cost is
displacement,
zero.
the relevant cost will be the additional 200 with the current price.
Okay. Okay. Yes. So in this case now, it will be that we experience two issues here. We experience two scenarios. You need 600, right? For this job. You need 600 for this job. Now, the question is now saying that material Y is no longer in regular use. It means if it is no longer in regular use, we need to exhaust what we have in stock. We need to exhaust what we have in stock. And since it is no longer in relevant use and it have no any alternative use, at what value will you value what you have in stock? Because if you don't use it, it's either you dispose it. So at what rate will you value the 400 you have in stock? Since it's no longer in regular use, there is no competition for this product, for this material. It means you need to just exhaust what you have in stock, which is the 400. But at what rate? What is the relevant cost associated with this?
At the
At the
original cost, sir.
current disposal cost,
At the disposal cost,
At the
disposal value.
disposal value. Why? Because it is no longer in relevant, um, in regular use. It is no longer in regular use. It will be at the disposal value. Because if you don't use it, you will dispose it at 12 naira. So it means there's an opportunity cost here. There's an opportunity cost here. When you use it, the opportunity cost, what you are foregoing is what? What you are sacrificing is what? Is 12. Take note. Take note of that, please. When you use 400 units, instead of getting 12 naira, when you use the 400 units, you will be sacrificing 12 naira. And once you are sacrificing 12 naira, the opportunity cost is that 12 naira. Is that 12 naira you bring into your computation. Anytime you have opportunity cost will always be the relevant cost. The cost of using 400 units internally and not selling it is what? What is the opportunity cost?
400 times 15.
400 times 12. If you use 400 units internally, you will not be able to sell it, right? You will sacrifice the disposal value. You will sacrifice the disposal value. So when you use 400 units internally, it means you won't get 12 naira per unit on 400. So what is the opportunity cost of using 400 internally?
Mr. Topo, I don't understand, please. This
So
one.
that is 8,400.
The opportunity cost, this is it.
Is it
You
not
know,
the difference, which is 3 naira times the quantity?
no, let's get it now. This is it.
Ha ha
This is
ha.
it. Let me come again.
Is it not 15?
This is it. Just listen now. You need 600 for the job, 600 quantity for this job. And this material is no longer in regular use. It means the 400 units in the store should be used. Should be used. And if you look at the statement that material Y is no longer in regular use and the units currently held as inventory have no alternative use. Have no alternative use. If you are not using it for the production of this job, what will be the cost you will get? if you are not using it. What is the scrap value? It means you are going to sell it. Current disposal value. See it. It means anything you are not using, the scrap value will be at this rate here. You sell it, you sell them at this rate. Any material you're not using, you sell them at this rate. Now, the point is this. If you are not using 400, let's assume you are not using 400 for this production. What is the opportunity cost? What is the sacrifice you are making? Or let me, yes. If you are
Original
using,
cost of 15 naira.
It's 12 naira.
Oh,
it's
15
12 naira.
naira.
It's 12 naira. This is this original cost is the historical cost. Yes. Is a sunk cost. It's not a relevant cost. Now, the current purchase price is a relevant cost. The current disposal value is a relevant cost. So once you have a material that is no longer in relevant use, what is the opportunity cost? In this case, if we decide to use 400 units internally to meet up our production, which we are going to do, we need 600 and we have 400 in stock. Now, since we are giving the scrap value, the current disposal value, if we should use this 400 in our production, what is the opportunity cost? The opportunity cost is 12 naira per unit, because by the time we use this 400 as part of our 600 units required, we won't be able to sell this 400 to get 12 times 400. So that opportunity cost in this regard is the relevant cost. As far as this material Y is concerned. Is one of the relevant costs. Take note of, is one of the relevant costs. So 400 multiplied by 12 is an opportunity cost. 4,800 should be 4,800. So that will be the relevant cost. Now, what will now be the fate of the remaining 200 units? The remaining, you get it at what?
The current purchase price.
You get it at the current
purchase price.
Yes, that is it.
Purchase price of 19.
Yes.
19 naira.
19 times 200 units.
3,800.
3,800. So this concept, you have to look at it very well. You have to look at it, because when you go to other questions, you see, that's why I say we must have to read between the lines. It's not like something you just cram formula. And this one, we must be patient to read the sentence very well. If not, the topic will be boring. I've seen students who tell you that they don't like relevant costing. They don't like relevant costing. They don't like transfer pricing, because these topics, you must sit down and read and understand what each phrase is talking about. So it is not a question you attack. Yes. You don't attack it in haste. So you must be very patient to tackle it. So let's look at that is material Y. Let's look at material Z. What is the statement saying now? That material Z is also no longer in regular use. But if the existing inventory of the material is not used for this job, they can be used as a substitute material on a different job, where contribution will be 25 naira per unit of material Z used. Can somebody give us the analysis of this? What will happen here now? Just take your time, read it. Material Z is also no longer in regular use. But if the existing inventory, what is the existing inventory? You must ask yourself that question. The existing inventory is 300. But if
300.
the existing inventory of the material is not used for this job, they can be used as a substitute material on a different job. You see, two options now. Opportunity cost is calling again. Opportunity cost is calling that where the opportunity cost of you using it for this job is what? Is 25 naira. You're going to lose 25
5
naira.
naira.
You are going to lose
Contribution
25 naira. So it means that, and I said opportunity cost is always a relevant cost. That thing you are losing is a relevant cost to the decision you want to make. Take note of that. That sacrifice you are making is a relevant cost. So in relation to this, can somebody move further and tell us what will happen?
Hello, sir.
Yes, ma'am.
I guess
The
the material Z will have to give the existing inventory of 300 at 25 naira, and then 200 units at
the current
the current price, which is
purchase
20 naira.
Okay, is everybody in?
Sorry, current purchase price, not
Where did you
disposal.
get
40
Current
naira.
purchase price, 40 naira.
40
Can
naira.
I try?
Yeah. I'm in line with her.
All
I
right, so
supported her motion. I'm
Okay.
in line with
My
her.
own opinion is this.
okay, sir.
I think you will compare the lower of the costs with the current disposal value and the contribution. But in this
Okay,
case, the material Z, your contribution is higher. So
okay,
you'll be losing that contribution because the current disposal, even if you don't, is 20 naira. But if you use it
okay,
for another job, you'll be having more money, profit
okay,
as the company, which will, in the long run, reduce the total cost of the
okay,
project, the cost saving. So that you'll be losing that 25 as a contribution because the current disposal is even lower than the 25. So it's a loss.
yeah, yes. So what will now be the split, sir? The split now.
So the split, you will times the 300 by 25. Then you will buy the 200 by 40.
Yes, yes. So what my organ now has added is that, if he has added a concept of you comparing the disposal value and you trying to use that material on a different job, which sacrifice will be higher? Which sacrifice will be higher? When you use it on another job, you make much more great sacrifice. You'll be losing 25 naira as against you selling it for what? 20 naira. So it's still in line with what she explained. But for example, a question can give you these two options: current disposal value, contribution. So when you are comparing current disposal value and contribution, you go for the highest value between the two. The highest value between the current disposal value and the opportunity cost, or maybe it can be in form of contribution, that's the highest value in your comparison will be the opportunity cost. So in this case now, 25 naira is the opportunity cost because there are relevant issues, current issues that has to do with you not using a product. Is you either sell it or you use it in another production to get certain values. So which is higher between the two? So a question can be in that line. So you think in that order. So some of these things are things, even when you read them in your literatures, you might not be able to comprehend them. I know so many people have been reading this, but you need somebody to tell you something regarding that. So what we've said is very correct. The opportunity cost of unit in inventory will be 300 units multiplied by 25, and the purchase cost of additional units of 200 units in relation to the current purchase price, which is 40. So this will be the relevant cost. So let's show it. Let's show it. So I'll now present another question, which everybody should be able to solve.
Hey, God, help us.
Don't worry, God has given you strength. Don't worry. So it's not hard now. It's just understanding. So once you can reason in that light, you
So we're
you
trying to understand now, but there's no always time on the exam time. On the
uh,
exam date, the time is not always enough
once you understand this
for
one
you
now,
to think and think.
once you understand this one now and you solve more examples, you will not spend much time in thinking again. But it's when you don't solve questions, you will not spend much time in thinking. Learning curve will always set in.
Yes, I'm on.
And that is the reality. The more you solve questions, the more you get used to the examination or the examiner's concept.
Exactly. There will be reduction in time.
Yes.
Actually, sir.
Learning curve in the exam hall. We'll get to the stable rate.
So material X, you have 800 units at 23 naira per unit. You have 18,400. For material Y, there is a split. There's an opportunity cost. So the opportunity cost is what? If you are in this class and you don't get what we are doing, don't just be looking, please. Data is expensive now. Don't just come and spend your data here and not get anything.
Sir, if it is data, it is worth.
Use that money buy chicken. Enjoy my life.
I'm telling you, 2 weeks data, at least you
So let me
rest
start
more.
talking. What would be the heading? How is it necessary?
The question is
What
calculate the
would be
total
the heading?
relevant cost. Calculate the total relevant cost of the
Okay.
materials for this job for the customer. Solution, relevant cost. So material Y, we have opportunity cost of units in inventory. The opportunity costs will be what? Let's see what is there of units in inventory. 400. This disposal value. We have the disposal value. And the value is what?
The total value is 12 naira.
So it's 12 multiplied by what? 400. You have what? 4,080.
1,800.
Now, the purchase cost of additional units will be what?
200.
Of additional units.
200 times 19. No,
200 multiplied by 19 naira.
38.
38.
So the total relevant cost for material Y will be what? Should be 8,000.
1,600.
8,600. For material Z now, material Z, we have it as what? We also have opportunity cost there.
Mm.
Opportunity costs. Opportunity costs of units.
400 times 25.
Unit in inventory. We have it as, should be 300 multiplied by 25. We have 75.
75.
And the remaining balance, that is purchase cost of units in inventory. Purchase cost of unit in inventory. Right. Purchase costs of additional unit. Purchase costs of additional units. The value will be what? 200 multiplied by what? By 40. And we have what?
8,000.
The total relevant cost here will be what?
15,500.
15,500. So total relevant cost will be what? Of material.
42,500.
Total relevant cost of material. 42,500. 42,500. So this is how we are expected to show our workings. Let's take it further. Let's take another example.
So please, let's screenshot.
Sorry, sir, please can you go back to that page again?
We're done, sir.
All right. So let's take another example. Let's say now Nanjo.
Mr. Toko, you have series of examples in your archive.
Nanjo. Yeah, all I can. Nanjo Limited has been asked. Nanjo, is Mr. Nanjo here?
My name
You
not show, sir. I am very well. Yeah. Yes, sir.
answer the question, Mr. Tope.
Yeah, you answer it. That is why I'm putting it for to him.
No problem. Yes, sir.
Mr. Nanjo Limited has been asked to quote a price for a one-off contract. One-off contracts. And then the company's management. Please, the video I asked us to watch, let's watch it. I don't want to treat the questions here. I treated one already. The other one is an ACCA question. See it here. And for those that have followed this class in that video, they will not have issues with the question in that last diet. So this is the question is here. I gave it to them as an assignment then. And though may I have my solution. These are my solutions. If you check the Pathfinder for the last exams, you'll see that their solution is just in words like this. Yes. So just for you to know what is the relevant cost, you put it down and solve. So I'm not solving this question. You is in that video. Let's solve it. Then I will now still give the question of last diet as an assignment. You go and solve it. The answer is in the behind the book. But if you like, just understand the question and try to solve it on your own. Don't just go and look at the solution. Yes. Just understand this topic, please. It will help you in a great way. Nanju Limited has been asked to quote a price for a one-off contract. The company's management accountant has asked for your advice on the relevant costs for the contracts. For the contracts. The following information is available. The following information is available. Materials. Materials. The contracts. The contract requires 3,000 kg of material K. Which is a material used regularly. By the company in other production. The company has 2,000 kg of material K currently. Material K currently in stock. Which had been purchased last month. For a total cost of 19,600. Since then, the price per kilogram for material K has increased by 5%. 5%. So the contract also requires 200 kg of material L. There are 250 kg of material L in stock. Which are not required for normal production. Please, somebody should begin to solve this now. Which are not required for production. So this material originally costs a total of 3,000. If not used for this contract, the stock of material, stock of material L will be sold. Somebody should begin to see something. What are you seeing here now? Will be sold. Will be sold for 11 naira per kg. Sold for 11 naira per kg. Okay. Let's talk about labor. Labor the contract requires 800 hours of skilled labor. 800 hours of skilled labor.
Peter Obi.
Skilled labor is paid at 9.50 kobo per hour. So there is a shortage. There is a shortage of skilled labor. And all the available skilled labor is fully employed. In the company. Fully employed in the company, in the manufacture, of products. Product P. So the following information relates to product P. Following information related to product P. So we can have selling price. Selling price can have 100 naira, can have skilled labor. The value is brackets. We have 38. We have other variable costs. Other variable costs. Going to have 22. So the contribution will be what? Contribution will be 40. The question is this: required. Prepare calculations. Showing the total relevant costs for making a decision. About the contract. In respect of the following. Cost elements. So what are those cost elements? Material. K and L. Can have skilled labor. So can we solve this? Anybody to give hints on what to do? Anybody to help? Calling for help.
Let me try you.
Okay, ma'am.
Okay, so for the material, so the material K, which is regularly used by the company for other production. So we're going to use that 300 at the cost of just
20,580.
Exam have started.
Okay, so for we require 3,000 kg,
Yes,
but we
ma'am.
have 2,000 kg in stock, and it's
Yes.
something that we use regularly. So we
Yes.
take that 2,000 kg at 19 naira, 600 naira, using that cost. Then the remaining 1,000 kg will be used on that increased 5% increase in value in cost. I don't know if I'm in order.
Okay. Yeah. But since it's irregular use,
Let me
don't
try.
you think we need to get everything?
Yeah, we need to get everything at this price, at this. Because what we have in stock is just 2,000 kg, and we need 3,000 kg.
Yes. But you know that even when you exhaust the whole 2,000 you have in stock, you still need to purchase more.
The extra 1,000 kg.
Yes. And you know this decision, even before, this is a plan now. Before you plan to execute before the implementation of this plan, that one you have in stock might have been exhausted. So why don't you just work based on the quantity you need
We
for
need.
this production? Planning that yes, you are going to buy at the current price when that
Yes.
time comes. So instead of considering what you have in stock, since it's always in regular use,
So we
that was
just use
what
the
we
current price.
very well
Yes.
against 3,000. Now the point is, how will you get the current price?
There's an information relating to it.
Okay.
So the
The co-
price has increased by 55%.
Mhm. So
Our current price will now be 20,580 naira.
20,518 naira.
Yes, sir. The current price.
The current price 2580.
Yes.
Yes,
Okay.
sir.
How do we get that?
1 plus 1.05 times 19.6.
Yes, this 19.6 is the price for is the cost for how many units?
Is the
2,000
cost
units. For 2,000
Very good.
units.
So don't you think you need to get the cost of 1 unit?
1 unit. Yes.
Cost of 1 unit is 9 naira 80 kobo.
Very good. Then if it now increased by 5%, which will be the current price?
It will now be 10 naira 29 kobo.
Multiplied by the quantity you
Per
need
one.
for this. Yes. Multiplied by
Okay.
3,000 kg.
30,870.
I don't know if is this
It's
clear, please?
10,290.
Yes, yes.
no, sir. Please, no, sir.
10,290.
We're on track, sir. It's clear.
Okay.
I'm not clear, please.
All right.
Mhm.
In
So
this area
10,290.
okay.
where you said you need per unit,
Yes. The company has 2,000 kg of material currently in stock, which had been purchased last month for a total cost of 19,600.
okay,
Now, 19,600 is the total cost of 2,000 kg. For you to get the value of 1 kg, what will you do? 19,600 divided by 2,000 kg to get the value of 1 kg. The price of 1 kg. The price of 1 kg, when you increase by 5%, will give you the current price.
10 naira 29 kobo.
Yes. So that 10 naira 29 kobo multiplied by the quantity you need to meet up with this decision, that is 3,000 kg.
30,970 naira.
Okay, you check that computation again. I think 10.29 by 3,000 will give us what?
30,870.
Okay, 3870. So that is for material K. That is for material K. Mr. Nanju, is this clear?
Yes, sir.
Okay, everybody, is it clear?
So, Mr.
Yes, sir.
Tope,
Yes, ma'am.
so the total amount, the total kg to be purchased at the current price, that means is 3,000.
Yes, 3,000.
Yeah. Okay, that means 1,000 will serve as balance, then the remaining 2,000 for the restock. Am I in under?
Yes.
Okay.
Yeah, the 2,000 is not relevant because it's always in use. So for us to maintain a stock level, a buffer level in our stock, we regard that 2,000 as being yes, since it's always in regular use. So
All
it
right.
is
Okay, sir.
If it's in stock and is currently in use, the
yes,
relevant cost will be the replacement cost.
yes. So looking at material L, what will happen now? Material L.
Contract requires 200.
Mr. Don, are you there? Yes, looking at material L, that the contract also requires 200 kg of material L. There are 250
Yes,
kg.
I'm here, but it's not convenient for me to talk.
Okay. All right. Okay, I get it. So there are there are 250 kg of material L in stock, which are not required for normal production. This material originally cost what? A total of what? 3,125. If not used for this contract, the stock of material will be sold at what? 11 naira.
Naira per kg.
That means that is the scrap value. But if you should use it, you will not get this scrap value. Do you get that? The contract requires 200 kg. So what do you think will happen here?
We'll use the scrap value since it's not
Since it's an opportunity cost,
it's an opportunity cost.
yes, that is what you will lose if you should use it.
Yeah.
Yes. So the scrap value of 11 naira per kg
Okay.
in relation to what quantity? You know, you have two quantity there. I want to know which of the quantity you are using.
Contract,
Yeah,
It's
what the
200.
contract requires is
200
200.
kg.
very good. 200 kg. What is relevant to that decision you want to make? 200 kg. So for L, it will be what? 200 kg multiplied by 11 naira per kg.
2,200 naira.
So the
That means
total,
the
yeah,
proposal
yes. So the total relevant cost of material will now be what?
11 naira.
Having multiplied 11 by 200, you
So we
have
are going to
2,200.
multiply
So 2,200 plus 3,870 will give you what? Total relevant cost of material.
3370.
1,007.
33,070 naira.
Yes, 33,017 naira. So looking at, once you understand the concept of relevant costing, you just do it within 10 minutes in the exam hall. But if you don't understand it, you abuse the examiner. That these people have come again. So let's look at labor. What will happen? You can see the whole story. That is how relevant cost. They will bring many stories and it's just one line you'll be writing. So let's look at labor. The contract requires 800 hours of skilled labor. Skilled labor is paid 9 naira 50 kobo per hour. There is a shortage of skilled labor, and all the available skilled labor is fully employed. It means there is no spare capacity. In the manufacture of product P, that is, they are engaged in producing another product, product P. The following information relates to product P. It means if all these people work in producing product P, we'll get a contribution of what? A contribution of 40.
40 naira.
40 naira. But this contribution is a component that is a function that we include skilled labor and other variable costs and deduct it from our selling price. The question now is this. The question is this. How many hours do these people work and we are paying them 38 naira for the production of product P. How many hours? We need to get the contribution, the skilled labor contribution. Yes. So how many hours will they work? Somebody should be able to get this. You know, we've been talking about this. When you pay 9 naira 50 kobo per hour and overall you incur 38 naira, what would be the number of hours? Yes, you recall your
Is it
relevant.
not 38?
Yes, right now. Try.
38 multiplied by 9 naira 50 kobo.
Yes, 38 divided by 9 naira 50 kobo will give you the number of hours. So how many hours have they worked that you are paying them 38 naira? How many hours?
4 hours.
4 hours.
That's 4 hours.
So what is the contribution of these hours in relation to the total contribution here? That is contribution per limiting factor. Let me bring that. What is the contribution? The contribution of skilled labor to this whole
It's 10
is
naira.
very good. 10 naira. 10 naira per skilled labor. 10 naira per skilled labor. Why am I coming like this? You know, we explained that when some people are engaged in the production of in a particular department and you are moving them to another department, the opportunity cost of moving them is what you will lose in that department, the contribution you will lose in that department. And what you will lose is the opportunity cost. That is why I'm coming this way now, is the opportunity cost. So the opportunity cost will be in this form. You need, the contract requires 800 hours of skilled labor. And skilled labor is paid 9 naira 50 kobo per hour. And there is a shortage of skilled labor, and all the available skilled labor is fully employed in the company, in the manufacture of product P. So the following information relates to product P. So now, what will be the relevant cost? The total relevant cost in relation to labor. Yes, somebody should try. The total relevant cost will be what?
Opportunity cost of the writing labor that is like I don't understand this labor, sir. Well, watch the video.
I guess it could still be the 10 naira. That's the
Yes,
opportunity cost.
yes. When you move them now from product P to produce these new products, the opportunity cost will be what? Will be the cost of you moving them will be what? How much are you paying them on a normal day? The cost of you moving them will be what? 9 naira 50 kobo multiplied by 800. How much are you paying them? 7,600. What is the opportunity cost? The contribution you will lose when you move them from product P. It will be 10 multiplied by 800.
How did they get that 10, please?
Okay, let me just show the workings now. The 10, how we derive the 10 is this. How we derive 10 is this. We said skilled labor is what? The cost, overall cost is what? 38 naira, right?
Yes, sir.
How much are you paying them per hour?
9 naira 50 kobo.
How many hours have they worked that you now pay them 38 naira?
800
38,
hours.
38 divided by
Divide
9.5
by- Okay.
will give you
Okay, that was what we got that for. That was
4.
yes, 4
So
hours.
to now know the portion of skilled labor in this contribution, it will now be what? 40 divided by what? 4.
Okay.
You
Thank
have
you, sir.
10. So that is the contribution solution. Solution. So we have it as this. That we should prepare calculation showing total relevant cost for making the decision. Costs. So for materials, that since material K is regularly used, using the existing stock, of the materials means that more of the materials will be purchased. More of the material will be purchased. The relevant cost is the replacement cost. So the replacement cost per kg is 19,600 divided by what? 2,000. When you do that, you're going to have what? You're going to have 9 naira. Yes, the replacement costs. And you divide that is 19,600 divided by 2,000, 9.8. Now that this will increase by 5%. If it will increase by 5%, I already know that I will just use 1.5. You can do it the way you understand. 5% of 9.8, you now add the result plus 9.8. So the result will be what? The result will be 10.29. The result will be 10.29 per kilogram. That will be the replacement cost per kilogram. Now, material L. Material L has no other use. And if the existing stock stocks are used, for the contracts are used for the contracts. The opportunity costs. The opportunity costs of not being able at 11 naira. Okay, the opportunity cost is the costs, yes, of not being able to sell them at 11 naira per kilogram. And note, opportunity cost is a relevant cost. So we have it this way. For K, you have 3,000 kg at what? At 10.29 per kilogram. Per kilogram. You have it as what? 38.70. For L, you have it as what? 200 kg at what? At 11 naira per kilogram. The result is what? 2,200. So the total relevant costs, of material, we have it as what? 38.70, 33070. Hope this story is clear. Yeah, hope this is clear, please.
Yes, sir.
Talking about the labor now, skilled labor.
Oh, Jesus.
Sorry, Mr. Tokpe, a minute. It remains small for me to copy the whole thing. Just a second. It runs through. Okay. I'm done, sir. Thank you.
So, for skilled labor, the contribution earned by skilled labor in making product P, is 40 divided by 4, and 4 hours per unit, which will be equal to 10 naira per skilled labor. Note, to get 4 hours is equal to what? That's 8. 38 divided by what? Divide by 9.8. 38 divided by, is it 9.8 now? 9.5.
9.5.
Yes, 9.5. So that is how to get that. Let's showing that 9.5. So now I want us to understand this. These skilled laborers, they're already working in producing product P. Now you bringing them from another unit to help in the production, of another product, the relevant cost will be what? The relevant cost will be what? How much are you paying them?
Sir, are they idle before they brought them?
They are not idle. That is why you can see, if you read the question, it's clearly stated. See it,
Mm.
that the contract requires this. There is a shortage of skilled labor, and all the available skilled labor is what? See it, fully employed.
Okay.
Fully employed.
Okay.
So you bring in them now, the cost, the relevant cost will be labor, will be the labor cost. How much are we paying them on a normal day? In
9
moving
naira.
them, we are paying them, 9 naira 50 kobo, 7,600. Now, if we decide to move them from producing product P, and they are contributing 10 naira per unit, 10 naira in producing 1 unit. When we move them completely, what is the opportunity cost? What are we going to lose? The opportunity cost of moving them, of not moving them, will be what? The opportunity cost of not moving them will be what? Opportunity cost of labor will be what? Will be 800 hours multiplied by what? Multiplied by 10 naira. If you decide to keep using them in the production of P, what will you lose? What will be the sacrifice? What will be the sacrifice you are making? You'll be making a sacrifice of what? Of 10 naira. Of 10 naira, because there's a decision you have to make between two issues. Is either you move this skilled labor to help in the production of the new product, or you leave them. If you should leave them, what will happen?
The
If
work
you
will not be.
Yes, if you decide to, the work will not be implemented, and the sacrifice you are making is what? Is this value, 10 naira multiplied by 800. So the point is,
Okay.
whenever we have two decisions to make and there is a sacrifice to make, the opportunity cost is always a relevant cost. The opportunity cost is always a relevant cost. So when you have two decisions, when you have options, what is that sacrifice that you make? That sacrifice is the answer you have to pick. Yes, it's the opportunity cost that is relevant to the question. We must understand this concept of opportunity cost. We must understand it. So when you have two options, what is the foregone alternative? That foregone alternative is what is relevant, to your decision. So we must allow this to rest with us. But for this to rest with you, you must go over this again on your own. You meditate on it and let it be part of you, and you'll be fine. Any question regarding this? So this is equal to
8,000.
8,000. 8,000. Any question? See this question.
Hello, sir.
Amitima.
Okay, the issue of this 10 naira, opportunity cost of 10 naira is still logical to me.
Yes,
I
very
didn't
logical.
it's still logical.
Yes, this is it, ma. These people, the skilled labor we have that we need, they are already working in a department producing product P. Now we need them if we are to meet up with our current decision to meet up with our one-off contracts. We need them. So the point is this: if we are to move them, there will be a loss of contribution in producing P. And that loss of contribution will be what? Will be 800, 8,000, 8,000. So if we decide not to move them, the contribution of 8,000 will be made in producing product P. So the point is this: anytime you have two decisions to make, in making that decision, if there is a sacrifice you have to make to meet up with a decision, that sacrifice, which is the opportunity cost, is the relevant cost related to that contract or to that decision. If you observe opportunity cost we've been treating, even from material, is the sacrifice you are foregoing to meet up with a particular decision. What is that sacrifice? That sacrifice will be the opportunity cost, and that opportunity cost will be the relevant cost. So this 10 naira, Nanju, yes, Nanju has a contract now, and he has skilled laborers who are already working in department Z to produce product P. Now he needs these people to come and help to execute this one-off contract. If he decide to use them, it means product P will suffer a loss of what? Of contribution of 8,000. Will suffer a loss of 8,000. So if he decide not to use them, he will incur a cost. But the point is that the workers are not insufficient. They are not available as much. So the opportunity cost, based on the decision he has to make, is what? If he decides to make the decision of moving these workers from product P, there will be a loss. If he decides not to move them, he might incur extra costs, but that is not given. So the opportunity cost he has to make is what? Is 8,000. 8,000. So this opportunity cost of 8,000 is a relevant cost. Is a relevant cost because it involves Nanju making an option. Should I get other workers outside, or should I move my workers in the production of P? So this now make this a relevant cost, which is a decision between getting workers, moving the workers in producing product P, or neglecting, putting off that contract because he's not having sufficient skilled workers. So that is why this concept of contribution is coming in. What is these skilled workers giving? What is their contribution in producing product P? It's 10 naira per unit, and we're using 800 hours. Overall, the contribution is 8,000. So by the time we decide to make use of them, we'll have 8,000. By the time we decide to move them, we'll be losing 8,000. So when you don't use them, there's a contribution of 8,000, which is the sacrifice Nigel is making for not using them, the opportunity cost of not using them. And that opportunity cost is the relevant cost. So,
Mr. Tope, I have a question.
all right.
So assuming that for the labor, and we are giving them, they have to hire skilled labor to do that job.
Yes, very well.
In calculating, we are only going to recognize the costs that they incur in hiring
Hiring. Yes,
those,
very well.
and
That is
we
the relevant.
ignore the ones that are on full capacity for the regular business.
Yes, that is the concept.
Another question I want to ask is now, on this labor cost, we're giving selling price, skilled labor, other variable costs, and the contribution of 14 naira. Assuming that
Yeah.
we're not giving this information like this,
Yes.
do we compute for contribution first?
Yes. If it is not arranged like this and they are just in sentence form, you need to compute for your contribution. Yes. If it is not arranged, this question, I've arranged it in this order.
Yes.
If it is not arranged in this form, maybe in a statement form, selling price is this, skilled labor is this, other variable cost is this, computes for the relevant cost of labor. You have to solve and get this contribution, and when go further and solve for the contribution per hour.
Okay. Thank you, sir.
So that video I talked about, this question, see this question, Mr. Smith. Mr. Smith, it's solved there. We solved this question in that video.
Okay, sir.
So it will be good if you can solve it. Let me even see what the question entails. The question is, material A, 1,000 kg of this material is in stock at a cost of 5 naira per kg. Mr. Smith has no alternative use for this material and intends selling them for 2 naira per kg. However, if he sold any, he would have to pay a fixed sum of $3 to cover delivery costs. The current purchase price is $10 per kg. So you can see material B, there is plenty of material B in stock and it costs $18 per kg. The current purchase price is $15 per kg. The material is constantly used by Mr. Smith in his business. Material C, in that order, the total amount in stock is 500 kg, was bought for $10,000 some time ago for another one-off contract that never happened. Mr. Smith is considering selling it for $6,000 in total, or using it as a substitute for another material constantly used in normal production. If used in this later manner, it will save what? $8,000 of the other material. Opportunity cost is calling here. Current purchase price is $40 per kg. Material D, there are 100 liters of this material in stock. It is dangerous, and if not used in this contract, will have to be disposed of at a cost to Mr. Smith. This is a cost to Mr. Smith because it is a dangerous material. Now, Mr. Smith, in disposing this material, will incur a cost of what? $50 per liter. So the current purchase price is $12 per liter. So is an interesting one. If you can look at it and come up with a solution, to be fine. On labor is a comprehensive question. On labor, talking about labor. Now take note, fixed overhead, anything fixed is irrelevant. They are not relevant to a decision because they are past cost. They are past cost. So I will appreciate if you can solve it. Even if you look at, if you watch the video, take your pen and paper and solve it again on your own. It will be much more better because the statements there need serious interpretation. And then mere watching the video, yes, you get it, but it's good you solve it again. Then after that, you can lay your hands on the last diet question on relevant costing. Yes, don't say they've tested this topic last diet, they will not test it again. They will still test them. It can be in another way, but the understanding you have in solving them will help you when solving other ones. So please, the question, is it question one or what? Yes, question one, last diet, I think is on relevant costing, something of this nature. Please try and lay your hands on it and solve, come up with something, a solution. Yes, come up with a solution that can be, that you think it's meaningful, and we'll keep improving and getting better. So you can do well to watch this video again and watch the other one. Yes, and we'll get better. So you can do well